and any advice I do provide has to be prepared for each individual circumstance. So with that caveat, I guess the most important thing, Andy, that I think to make intergenerational wealth work, especially with real estate, is and I was taught this by my dad, who's been in real estate for generations for his family, is it's not if you can buy, it's if you can hold. And most people try and skinny up a deal just to get into the deal, and they don't realize that how much can change over time. And if you really want to hold an asset in a family and transition it, you've got to be able to run it smart, and you've got to not over lever the thing, because things don't always break in your direction, and you better make sure you've got your outs set up.
Yeah, that's good. Yeah, that's absolutely true. Things definitely don't always work out as planned. Most of the time that is the case, actually. Mary?
Yes.
Thoughts on that question?
I guess I agree with Michael on that. Things don't typically work out. Now it's a great market, so things are working out well. But I've been around long enough to see 2 recessions, and sometimes things don't work out as well. So you need to be able to weather the recessions as well as the up times. And real estate's a great investment, and it's created a lot of wealth for a lot of people in this country. It's a way for regular people to build wealth that don't inherit it. You know, through 1031, I've seen people turn their primary residence into a rental home and exchange that into an apartment building and then into this and that. And so it's a great way through real estate to build wealth that you're not going to inherit. So I think real estate's still a great investment, but you just have to be able to weather the down times, which will come again. I can promise you that.
Yeah, absolutely. They definitely do. We saw the last downturn in 08, 09. That's for sure. Brian, your thoughts?
Yeah. So, I mean, I don't necessarily at this point look at it like generational. Like my parents weren't they didn't pass on anything to me. And I'm at this point, the one thing I agree with both you guys is like, I didn't really need to be liquid. So I always look for things that were going to sustain, so whether it be, like a commercial building, the affordable housing project, I knew that I could sustain whether the ups or the downs during that time. So I just knew that I look at everything like long term and, reevaluate that when I'm 55, 60, 65 at that point. But I always kind of invest in projects knowing that I'd be able to sustain it if things go sideways. Now, if they really go sideways, I think, I probably could have lost my shirt just like a lot of people, but that is sort of the goal going in, just trying to be as risk averse as I possibly can, but also understanding that it's a long-term project.
Mm-hmm. No, that's good. The long-term mindset's the best mindset to have. That's for sure. Jack?
I would say simply, the last 20 years of my career, I've actually worked with a number of my clients who were my clients in my first 20 years of my career, and watched and help them transition their real estate business to the next generation. And so the question I would ask is like, what kind of kids do you have? Like, what's their real estate DNA? I mean, are they passive investors? Do they really want to be musicians? Do they want to get their hands in the business or not? And it really matters, right? So what you hand over to them and what form it's in, what kind of scaffolding you may need to build around them, to support them. A lot of times my clients will have teams together, right? I may be part of that team. There may be, Michael, folks like you who are there to help sort of pull people along, but you don't want to ask your kids to do something they don't want to do. And if they just want to clip coupons, just let them clip coupons.
Yeah, that's good, Jack. That's true. It does depend.
Jack, is clipping coupons a metaphor that I don't understand, or is that actually
right. No, right. Yeah, that's right. Now, triple net leases, right? Just
Gotcha. Okay, I got it.
Everybody likes a check. That's my rule. Everybody likes to get a check.
Just get a check in the mail, right?
Heirs like money. That's my other rule. Heirs like money.
Right. Gotcha.
Heirs like money. That is true. I'm hoping my twins, they want to work, and they want to do the work and inherit that gene. Okay, next question. Jack, we'll start with you on this one. What are one or two principles that you've seen your clients implement after being in real estate development for a few decades now, you think would make a big difference if implemented consistently?
I think always on the top of my list is what is the time horizon that a client of mine is sort of working under, is developing to. The merchant builders who are kind of in and out, who are there for a fee, really often aren't thinking long term, and I think the folks I've seen who've been most successful, regardless of their, they may be holding for a long time like a REIT, they may be selling quickly, but if they're building something that they think has enduring quality, right? They're not cutting corners, and they're listening to the market and listening to their clients out there, their potential tenants and all. It's a total formula for success, I think.
Yeah, that's good. That's good. Michael, ask you that same question. Being in the banking industry for as long as you've been now, for a few decades.
Well, I'm going to jump back to Jack's world or Jack's comment earlier about what kind of kids do you have? Again, I'm involved in a lot of multi-generational family situations, and a lot of the times the kids have no appetite for this, so they've got to surround themselves with people they trust, and they generally go off of who their parents' generation used, and then they develop their own, because kids like to do their own things. But the most important thing is develop those relationships principally with people that'll educate and inform you, because the landscape's constantly changing, and so you want to build those relationships, because you're going to need to lean on them at some point in time. And that's what I encourage everybody to do, is teach yourself, and then make sure you've got some honest, hardworking people that you've picked to work with you, and that usually carries you through.
Oh, that's really good, Michael. I think from a principal standpoint, having great people in your life who you can trust is a big deal. That's for sure. So it's so true. I think out of anything, teaching our kids and having that mindset to surround themselves with people they can trust and who really know what they're doing, that's good. It's really good. Brian, any thoughts on that one?
Yeah, I think, like, looking back, just having, multiple people that look at projects, and I think I would love for everyone to be completely honest with me and tell me the highs and tell me the lows of everything, and I would love to listen to 10 different people and see if there's a common thread and chain, and say like, oh, a lot of people believe in this and some people believe in that. People that want to be involved, people that also don't want to be involved. So I think I'm really good. Like, I didn't know this at a younger age, but I'm really good at like listening to a bunch of information and deciding for myself, as opposed to just like listening to just a few people. So I think that would have been the thing that, if you said, I guess 10 years ago, what would have been different, maybe even 15 years ago, what would be different? It would be like, get to know more smarter people and have conversations with them. Like a lot of people, 15-minute phone call. I'll tell you everything I need and I know about the NBA, and you tell me everything you know about this one project, and that's a good deal, right? So, people love hearing stories about this teammate and that teammate. So I just think, like, being connected with more people that are in that line of work, and different people from all walks of life.
No, that's really good. Yeah. Having not just a few, but multiple people that you can really listen and decipher, okay, what's the best information from what they're saying.
Correct.
Yeah. No, that.
And one more thing also is, sorry, my phone's ringing, but follow your gut as investors. I mean, sometimes people just don't have an appetite for this stuff, and they don't want to know it, or it just makes them uncomfortable. And you just because it's a good deal on paper or in the story, if it doesn't agree with you, you don't need to jump into it. And too many people don't want a good deal to pass up, but even a good deal that they don't feel comfortable with, it ends up going sideways because they get out too early because they just don't like how things are developing, and maybe they haven't fully realized what they expected out of it. So follow your gut's always a good one as an investor.
That's really good, Michael. It's really good. So many people do get in trouble because they do the numbers and they think, I'm just gonna squeeze a few more dollars out of this or out of that. And speaking of relationships, I learned really on, only do no-brainer deals, period. Only do no-brainer deals. Don't mess around. So it's really good. Brian, let's start with you on this one. What are the most essential long-term strategies, from your thoughts, that we as real estate investors must make to increase our portfolio in the days ahead? And then so kind of what we talked about, but just any strategies that you would think
have a lot of money to sustain a downturn. make sure you can, whatever happens, make sure like you learn that worst case scenario and you can carry a project through, because if you can't, you can really get yourself into trouble. So I think that understanding, a lot of people look at the highs of a real estate deal and what I can make. I think also looking at the backside of that, saying like, okay, if this were to happen, or delays or this or that, like, can you sustain it? And I was fortunate with the money I made as a basketball player to be able to do that, but I can understand how a lot of people, probably can't do that and get caught up with that.
Yeah. No, it's true. It's really good. Jack,
I think on the positive side, kind of trying to force yourself to look around the corner, and figure out what's ahead. I mean, you look at the trends in downtown residential, for example. I mean, maybe that wasn't all predictable, from Amazon and people wanting to live close in the urban area to where they work, this new generational stuff, but trying to think about where's the market going? Think about last mile delivery issues. I mean, I think that was relatively predictable 3 or 4 or 5 years ago, and you started to see people pick up small industrial properties, right? But that's turned into just a firestorm now. I look at light rail and bus rapid transit in the region here on 405. I don't think the market has actually has yet accounted for the phenomenal transformational impact that infrastructure is going to have. And I think you're going to see people kicking themselves saying, God, why wasn't I investing in Burien and Tukwila and Renton when the BRT opens in 3 years, right? On dedicated bus lanes on 405, and CTAC, yeah, right.
Yeah, exactly. That's partly why with the Adrian in Des Moines, it's a emerging market where we saw good opportunity there.
Right.
I'll give an interesting story. I go on a walk every Sunday with one of my real estate investing buddies, and we took the light rail at 7 a.m. from Northgate on a Sunday morning and rode it all the way down to SeaTac and just watched everything. And we got off in spots and got back on just to see the neighborhoods. But that's really the only way you're going to see where, progress from beginning to end and see what's really happening. Yeah. And, again, follow your gut, inform yourself, teach yourself stuff, because these are the kind of things that make you a good real estate investor. And that's one of the things that we did. So we know where we want to be in the next 5 years.
You can look at the numbers too, Michael. Thinking about that light rail ride you took, the East Side has an enormous housing crisis. I mean, and they're just at the front end of it. There's going to be 50, 60, 70,000 new jobs in the, Bellevue, Kirkland, Redmond area in the next probably 7 years or something. And it's just, they're not even close to having the housing to deal with that, right? But East Link will be open. And I think what you're starting to see now is people are figuring out that, that Rainier corridor, is going to, people I think are going to be living in Seattle, and they're going to be reverse commuting over to the East Side, right? And Seattle has a housing inventory, and there's just a boatload of underdeveloped stuff in along that part of the corridor. So I think there's huge opportunities there.
The southern part of MLK,
right,
all the way from essentially the where the projects move to the Boeing access road, I was shocked that there was nothing. I mean, it's parking lots.
Oh,
I was like,
yeah.
I can't believe this.
10 years from now, it's all going to be different.
Yeah.
Yeah.
Can I ask you both a question on that?
Yeah.
Well, how do you like, are you hesitant based on like sometimes like government doesn't push these things through, or like it ends up supposed to be 2-year project turns into a 15-year project? Like, I know that it's supposed to happen, but are you afraid that things will get turned down and stuff like that? Like, how do you factor that in? It's something that should happen. It's a little bit out of your control.
Well, if you're talking about the infrastructure, Brian, about the light rail and the bus
Yeah.
rapid transit, that's going to get done. It's fully financed. It's locked and loaded. You know, they're in construction planning right now. Eastlink, you know, the over to the east side is, I mean, it's virtually built at this point. They're going to start running. They're going to start running test trains next year in 22. So, yeah, I don't think that's going to be a problem now.
Okay.
Actually,
So you guys,
I live on Mercer Island, and they're running the test trains now, not human, but they're testing the tracks. But if you go out towards the Spring District in Bellevue, you can see that the infrastructure and everything's in place, including the service bays and all the buildings to support the network. I mean, it's not even an idea that might get funded. It's already built and just waiting to get turned on.
Right.
And the housing over on the east side can't support it, but
Right.
you know, it's a little late for that Spring District because all the values have shot up tremendously, and the building is underway right now. But there's still other markets where light rail was already in place, and it just hasn't caught on to the development bug yet.
Yeah, so I'm out in Boston, and wherever there's a stop, there's a city. I mean, things like
Exactly.
the last 5 years, things have. I mean, I'm talking nothing into probably 3,000-4,000 apartments, a full gym, grocery store. It's like these cities are just building around all these, and the ride is, you know, a 17, 18-minute ride. You talk to people like, yeah, I just commute into the city. It's a lot easier. Some people say it's easier to commute 18 miles out than it is to commute 7 miles out. You know, it's just based on, you know, these stops. So you guys are onto something there.
Yeah, it's amazing, and it is going to happen. It does. It happens. Like just like those cities, Brian, that have been built. Boom, boom, boom. It happens. So the areas, Jack, just that you mentioned, Burien, for instance, Tukwila, SeaTac, that whole corridor is going to.
It's going to explode.
Yeah, it's going to explode.
Yeah.
Mary.
Yes.
What would you say are two main reasons for most of your successful clients growing and doing well right now? Reasons or principles?
I have a wide variety of clients. Some are, you know, big developer. They develop and hold, then sell again. They're really active. They seem to be doing a lot of industrial
Yes,
at
they
this
are.
point. Industrial, and a lot of them, they're looking at Florida, Texas, places like that. As well as here in Washington, the Puyallup area and things like that. I also have a lot of clients that are more individuals that do rental homes, apartment buildings, and things like that. And the market's really tight right now for those types of properties. I get a lot of complaints about that for the people that are looking for things they don't need to develop. It's tough to find rental homes in this area at a reasonable price. And but people still seem to be finding things. And so, which is good. I don't have that many canceled exchanges. I mean, they find stuff and buy it, and I hope it's doing well. So, and hopefully they're getting tenants and things. So I think they're looking for things that are rentable. I also see people buying things that are vacation rentals. They're going to put them on Airbnb or VRBO. People are doing things like that. They're being creative in the types of income properties they're trying to find. But somehow they're making it work, even in this kind of difficult market. There's a lot of money out there. All those PPP loans are sitting in people's bank accounts. You know, the interest rates are zero on deposits effectively. So there's a lot of money chasing not that many properties. So it's competitive, but people still seem to be finding things.
Yeah.
And I've had a few clients that invested a few years ago, and while they're selling at, almost to double the price a few years later. So it's pretty amazing. It's kind of, you go, oh, this is going up a little too fast.
Yeah. Yeah. I've seen that too. Multiple properties, a few years later, literally doubling
Right. Yeah.
the value.
Interesting market, but people are finding things, which is good.
Yeah, absolutely. Michael, same question for you there.
Well, I'm going to piggyback on Mary's last piece, but there is a lot of money in the marketplace, both on the investor side and on the banking side, and there's a lot of non-banks out there. So there's money to finance these projects, even at these slimmer returns. And I'm going to stay away from real returns given what's happening with inflation. But, I encourage everybody to get your act together and lock in some of these low rates, because the banks have 50% more money to lend today than they did at the beginning of 2020, because there's so much cash and they're not earning anything on it. So if you can put a project together, and if you can put your financing papers together and make a project make sense, there will be a bank that can jump on that deal and finance for you. And these low rates, we're locking rates for 10 years for some clients at 2% on some residential rental properties and 3% on some commercial ones. And I mean, these are, and we're making money as an institution, even at those rates. And, but, this is going to be an unprecedented time. Don't let it pass. So.
Well, everyone see why I had Michael on with the rates that he's getting. It's pretty amazing.
Well, we do have a big balance sheet at Bank of America, as you can imagine.
Mm-hmm.
Okay, Mary, asking you one of the big questions that I know a lot of our attendees are wondering. What is the latest information on 1031 exchanges, and are they going away?
Sure. Of course, the Biden administration proposed to limit them back, I think, in January as part of his platform when he was running. And then their administration proposals came out in January, I think. And I had a lot of clients calling me worried. And my response then is the same now. I said, I've been lobbying on 1031 because it's a creature of statute. So you have to lobby. You always have to be educating the current Congress people and senators. So, and what I found over the years is that 1031 is as popular with Democrats as it is with Republicans. Everybody loves 1031, except maybe a few people in the Biden administration who aren't in Congress. And so I wasn't particularly worried this time about 1031. Of course, Biden doesn't have a man. He has like one or two votes that he needs to get. And there's a lot of moderate Democrats, and there's a lot of Democrats, one over here in Redmond, Del Bene, those are some of my best clients. And we had a lobbying meeting with Del Bene. And I said, Congresswoman, some of my best clients are out of your district and they do a lot of 1031s. And she just kind of smiled. So, and this is happening, all over there's a congressman from Napa County, a lot of exchanges down in Napa, and they know that their constituents who contribute to their campaigns love 1031. Everybody loves 1031. So when the House bill came out, or that came out of House Ways and Means back in August, I think, there was no mention of 1031, which was pretty much a death knell for the administration's proposals. And so far, there's a lot of activity going on right now with that, the Build Better Back bill, but there's been no mention of 1031. They're trying to raise taxes through other ways and raise the rates, I guess, which will make 1031 even more valuable for people at the upper end. There's like a surcharge, I think, on income at a pretty high level of income. So it's just going to make 1031 more popular. And 1031 came in 1921, so it's its 100th year. I don't see it going away anytime soon. It's good for the economy. People reinvest in real estate. It creates jobs. You can make all these arguments. And it's, as I said, it's a way for people who don't have wealthy parents. They can create wealth through real estate. So it's popular with everybody. And so it's not, like I said, it ain't over till it's over. I guess that's baseball, not basketball. But I don't see 1031 being impacted even if this Build Better Back bill passes. I don't see 1031 as being in the bill. It'll just be more valuable based on the tax increases as a deferral mechanism based on the increase in taxes that might come out of this new bill. So it's all, thumbs up on 1031.
Yeah. Okay, that's great. Great to hear. Great, at least it's not fully certain, but it sounds like for sure it's not going to go anywhere, which is really good news.
Yeah, I think that's true.
Yeah. Michael, strategy-wise, in building a portfolio, what just strategy of financing, what have you seen some strategies implemented to finance and build a portfolio?
Well, again, and I'll use personal examples on these things, but I'm a risk averse person. And so, I like real estate and I like projects because I know the benefits of holding it long term. But, even if it gets a little more expensive than I want to pay, I'm not going to lever it up more than 50% in many cases. And if I can't put all the money in myself, I'll bring in an investor and do it that way. But I can sleep better at night knowing that I'm not over levered because that's my personal bias. And all of those things have worked out. I have a long-term time horizon. So again, I'm just making sure I do it that way. But again, that's, you got to go with your gut and you got to go with, because you've got your ass on the line as the investor with your balance sheet. And you want to be able to, to own that thing in 10 years and reap all the benefits out of it when you do it. So those are the things I encourage people to do. I hope that answered the question.
Well, can I ask you I don't want to put you in a bad way, but you guys like the 50%, like if someone comes to you and does that look like, is that what you're looking for as a bank, or that's what you're looking for as a personal investor?
No, so I encourage clients actually, again, Brian, if someone's got real estate, operating company, stocks and bonds, you've got to weigh it all together. And so if they're most operating company clients of mine are making 20, 30, 40% cash on their invested capital in their operating company. That's you and your income from your contract, for example. It's reliable, it's coming in. So they might be able to take a higher amount of leverage, but that's not me personally. I'm giving you my personal story. We do, if I've got a client making millions of dollars a year and buying $5 million houses, and we're putting 80% leverage on every single one of them because the money's so cheap, and we don't want to take money away from other things. It really depends on the person's situation. So.
Got it.
Yeah.
Let me follow that one more time. What would be the safety net of being 50% loan to value, like for your personal?
I can sleep at night knowing that if the one of the leases in the tenants, because they're all single asset properties with single tenant use, if one of them goes dark and I've got 5 of them, the other 4 can carry the responsibility I have on the 5th one. That's the situation that maybe you needed some color on. So.
Okay.
Yeah, good questions, Brian. Good thoughts, Michael. I'll just add an answer here on my end. I think from a strategy standpoint, financing and growing a portfolio, Michael, you mentioned a 10-year time period. It's amazing how once you own multiple properties, if you just hold, how your equity grows. You're paying off your mortgage, your equity is growing. In my early 20s, I took a real estate class, and an investor likened real estate to corn. If you plant those seeds and you let that cornfield grow, harvest the corn, take some of that equity out and plant more seed and buy more real estate, and you do it in a low lever fashion, I mean, that's how you do it. And I'll always remember that. That was 20 years ago, but I really likened that analogy. Jack, next question for you.
Sure.
How have you seen some of your clients develop large portfolios, thousands of units, given your clientele?
Well, we work with them pretty closely. I think, as you understand, and I mean, we try to be, not just attorneys, but counselors, right? Helpers, advisors, right? And I think we've had we're in a place to have a relatively unique view of the market. I mean, we work with owners and developers on the one hand. We know the real estate itself because we've been hanging around it for so many decades. We know the cities and the people who are making decisions. I mean, the fact of the matter is, what you can do with your real estate from a development point of view is what they let you do, right? And every city is going to be different in terms of what the risk profile is within the city, and it's going to be based upon all sorts of political consideration, and it's going to be based on human considerations too, right? I mean, what is that planning director? I mean, do you have a good relationship with them? Is he a jerk, or is she a problem, or are they predictable? But the other thing that I think we've worked with well with our clients is a funny story. A lot of times I'll talk to my developers. I haven't done this to you yet, but I will. And I'll look at them. I'll point to my developer and I'll go, you're not my client. And they'll look at me and go, what are you talking about? And I say, well, actually, my real client is the capital back there behind you. And they'll look at me and go, oh, yeah, actually, that's right. And I'm okay with that. So, we're super focused, Michael, on, what does capital need? And, because ultimately, I usually get the call at some point in a development process from capital or somebody representing capital. It's with a simple question: is it okay? Is the coast clear? Is it safe? Right? And I've got to be able to answer that question. And so everything we do is sort of geared toward the day when we have to answer that question. And working with our clients to make sure that we, nothing is risk-free in this life, right? So that we manage the risk and we identify the risk decisions the clients have to make and help them to make it well. It's been really interesting in this market because, as you know, since the end of the recession, I mean, this global capital has come in here and rationalized this whole market. I mean, it's not like, when I started many years ago, it was, you had a local banker and you had a local broker and the construction company, was local, and the developers, everybody was local, right? And they were all had sharp elbows and they were, kind of trying to squeeze each other out and find room. And that's just not it anymore, right? I mean, everybody's playing in this global pool and it works really well. I mean, the rules are super clear, right? From deal to deal to deal, I think. So.
Yeah. Oh, that's good. And it's true. It's a different market nowadays.
Mm-hmm.
Sure. And a lot of things are more transparent with how deals are done and what's happening.
Right.
Jack, how about a story or two from a client's success, a success story from one of your early days and how well, and
I don't know. Most of my stories, I say, are going to be published only posthumously, but I mean, I think of a couple good examples of clients I've worked with for many, many years who've been really tremendously successful. Dan Ivanoff, Schnitzer West is an example. He had been working for MBK, Mitsui, Berkshire down in the Kent Valley back in the 90s, early 90s, and, kind of saw an opportunity to kind of do a building on his own and went off and did it and struck up a relationship with some strong capital at the time, which was the Schnitzer family, right? But Dan has always brought a sort of a level, very high level of intellectual rigor to everything he's done. And he's always paid real close attention to not just the market, but what are the needs of the clients he's trying to serve, right? Mm-hmm. Huge amounts of attention to the, target tenant market and really getting to know them, not now, but, what's it going to be 2 years from now, 3 years from now, and trying to, and, going around the world and finding best practices. So, I mean, that's really he's done very well with that, but it's, it's finding a practice that works and sticking to it deal after deal after deal. Greg Smith and Urban Visions, you know, you guys know him, quite a great guy, great developer. You know, Greg has got, he's got a real instinct for good land. It's just amazing, right? I mean, he gets into sites, talk about seeing around the corner, you know, well before anybody knows what's going on. And he's patient and he waits, and then the world sort of comes to him. And so a lot of his deals, you know, he sat on land for years, and then all of a sudden you wake up one day and it's like, oh my God, you know, the State Department of Transportation needs to condemn your property because that's going to be the south portal to the new tunnel going through downtown. Like, you know, you didn't know that 10 years before, but
Wow.
you know, it's just a series of those things. And but also finding good partners, building great buildings, and building, as I said earlier, all these guys for the long term, right? Product that is going to carry their name out, you know, into the future, and something they can be proud of.
Yeah. Yeah. Oh, that's great. Yeah. Those phenomenal reputations and have done amazing jobs in the Northwest. That's for sure. Some of the best. Mary, how about a story or success story from one of your clients from early days?
I have some clients who are still with me, but they're some brothers. They inherited some property in Redmond from their family and ended up selling it to a little company called Microsoft. And this was years ago, and they exchanged into an apartment building in Bellevue, eventually sold that. They exchanged into some mini warehouses. Those got condemned by the county for some probably for light rail or something.
Sound transit.
Yeah. And now they've moved into other properties, hotels and apartment buildings from there. So just kind of, you know, taking, and these weren't super wealthy people, but they are now. They just kind of exchanged and deferred, and exchange is what we say, exchange. Then when you die, your heirs get a stepped up basis. And as we've talked about, they can clip coupons or get ACH payments, or go into real estate themselves and develop it. So it's been a great wealth builder for this particular family.
Yeah, Mary, their name ends in a vowel.
and they may have worked in the chicken industry early on.
That's very possible. That's very possible.
Yeah. I gave that to, we had our marketing or lobbying with Congressman Del Bene. She's on House Ways and Means, and I said, you know, I've got a client in your district that actually, because she worked at Microsoft, so it was all kind of came full circle, explaining how 1031 works for people in her district.
Well, and for the broader audience, the best stories were before that chicken coop was electrified, and you get to hear these things firsthand, and you just can't believe it. So
it was the early 90s. I did the rezone and the permits on that chicken coop.
Oh, you did?
Yeah. Yeah.
We all were back there. Yeah.
Wow. Well, I think there'll be stories like that in Burien, SeaTac.
Yep.
Brian, your thoughts, what advice would you give to a new investor on partnerships or being part of an ownership group? What, in your mind, what has worked well or hasn't over the years?
I think the advice would be exactly what Michael just said. Like, try to be at that 50% loan to value, kind of take a long-term approach, always be aggressive in trying to, you know, take something and turn it into something else. Like you just, like you can grow slow by making, you know, the right deals on the buy. But I've learned a lot during this whole time. I mean, the biggest thing I would just say is just being risk averse. But I like a lot of this stuff, like looking around the corner. I thought that was great advice. You know, the 1031 stuff, it seems like great advice. So, you know, like the biggest thing I tell, I mean, the circles I run in are typically NBA basketball players. I would probably say, you know, take some of your money and put it into real estate, and then use that and let that thing grow throughout your entire NBA career and a couple of years after that or whatever. And you'd be surprised what it can turn into.
Yeah. Oh, that's good. That's good. It's true. Over the years, it just continues to grow and grow. Would you have made any changes on your portfolio over the years?
Me personally,
Yeah.
yeah, I would have done probably more bigger projects. Like instead of doing, I started out small in like single family houses. I would have skipped that and gone to 12 units, 20 units, try to build it up to 50 units, 75, 100, 200. Like, I think that I like that. And I love the whole affordable housing thing because it's long-term, but it's risk averse. So I think that I would have probably ventured down those roads a little bit more at a younger age. Like spending time and money, mostly time, handling single family is not worth the return for me and my family. But, doing 20, 50, 100, that seems like a better road to go down.
Yeah. Economies of scale.
For sure.
Kind of. Yeah. No, that's good. That's really good. So we're a little over, so I'm going to try ask a couple questions, then we're getting into lightning round. Jack, what are your clients making decision-wise right now? Are they changing any of their decisions with the current market, would you say, compared to what they used to do?
Obviously there are product types that are super hot right now. Amazon office in Bellevue, last mile delivery anywhere in Puget Sound, and life science in downtown Seattle. I mean, the prices we're seeing on land transactions are just like phenomenal in downtown Seattle right now for life science and conversion of existing buildings. We're seeing that life come back to downtown high-rise residential. Rents are actually above where they were pre-COVID. And so we've got more people coming back in now looking at 34-story towers in downtown Seattle. Go figure. But I think, like Michael says, people are just like, they took a pause at the beginning of COVID, but they're going for it, taking advantage of the opportunity. And I talk to folks across the country, as many of you do, and although we sit in Seattle and go, oh shoot, it's tough downtown, and things are, but you look at the rest of the country, and this market is unbelievable. For a whole bunch of different product types. So I pinch myself that my career overlapped with this cycle. It's been phenomenal.
Yeah, no, it really is. It's true. Michael, thoughts on what are your thoughts in the capital financial job markets and rates potentially ticking up in the next year?
Well, obviously, higher inflation paired with higher interest rates is not good for anybody individually or on a corporate basis. But, one of the bright spots is U.S. earnings of companies, small, medium, large, generally are still strong. And they actually grew year over year for the last, call it 18 months, and are expected to grow in the high single digits. So people are getting smarter how to, when we're having to restock inventories now. There's a lot going on in that space. So people are seeing revenue growth there. They're getting smarter about how to deal with all the COVID extra expenses, and capital is so cheap. And so people are employing, those three legs of that stool, and all that stuff trickles down because it keeps jobs solid, especially in this area, which allows people to pay more for real estate or rent properties. I mean, everything is interconnected. I think we saw the news from Powell yesterday, and it's kind of gotten a mixed review. I mean, they needed to somehow figure out how to put the brakes on this without putting the brakes on it. So I'm going to be following it closely. We've got a legislative review that we do here internally every 2 weeks that I listen in on, and it wasn't that interesting. It's obviously getting more and more interesting because there's so much going on right now, and I try and stay on top of that because it dictates what's going to happen in the next 12 months. And, pay attention to rates and pay attention to inflation because that's going to move everybody.
Yeah. Yeah, that's good. That's really good. All right, I'm going to jump into the lightning round. So we'll just ask quick questions for a few minutes, and then we'll take a few Q&A questions. So everyone can just answer as they want to. Is now a good time to increase your real estate portfolio?
Yes, in Seattle market. I mean, in the region.
Yeah.
Yeah.
Anyone else?
Not for me. I got a lot of stuff already out there, Andy. I'm good.
That is very true. What sectors would you buy in?
I think Seattle multifamily, 5/2 stuff, proximate to light rail or high capacity transit all day long. And, this last mile stuff that's in the urban area, these, 40,000 square foot, 25,000 square foot, single story warehouses that are getting snapped up all over the place. I think they're great covered land plays. Because they're not capital intensive. You're not putting a ton of money into them, right? But they're generally going to be well located. And when we get through this last mile thing and it sort of all re-rationalizes itself, you're going to be able to redeploy these sites, I think, for other.
And for smaller investors, my wife and I took a Seattle Architectural Foundation tour that started at the Columbia City Light Rail and went through the town and went back out. But you don't have to be on Rainier Ave or on MLK. There's a lot of stuff in between there that's getting redeveloped. And so for the smaller investor, don't look at, First and Main, look at Second and Olive or whatever, just right off the intersection, because you're going to get clipped in a good way with the up zone and it'll be desirable to live there. So.
Right.
Yeah. Great thoughts. What's a sleeper city, neighborhood, or market you think is going to be a gold mine?
I've talked about several of them already, and and I agree with you, Michael, on your
real estate or stock market.
Both.
Yeah. Sorry.
Well, some of the real estate stuff, Michael, is a bond, right? I mean, if you do it right. I mean, so you call it real estate, but really it's an annuity, it's a bond, it's something where you're cashing checks and you got low risk and low leverage. And so I tend to look at my investment portfolio more that way, right? What's the leverage and risk, and try to balance it out throughout product types.
Yeah, that's good. Mary, where are your clients? Where are you seeing them invest? Probably all over.
Yeah, I have a lot of national clients. For some reason, I have a lot of California clients, which is unfortunate because I have to pay tax in California and they have high taxes there. But outside of the Seattle area, I see a lot going into like Orlando, Texas, Southern California, Utah, Boise's going nuts.
Idaho's going nuts.
Yeah, it's kind of a backwater before, but now it's really popular. I think Jack said something. The whole country seems like it's on fire. This is the busiest December I think I've ever had.
Wow.
And, it's just a lot of construction, apartments, things like that. It's kind of crazy. And I think because it's cheap interest rates, people are looking for real estate as a hard asset in these kind of somewhat uncertain times. So it's just kind of nuts. But like I said, people are finding stuff to buy. That's for sure.
Yeah, absolutely. Oh, it's true. There are deals out there for sure. You just have to look, find them, but find a good deal. I read a book once by an author, Dolph DeRoos, and he said it's better to pass on a good deal than to buy a bad one. True. I think we talked about that earlier.
Yeah.
Crystal ball for 2022. Is it going to continue?
I would say yes in Seattle right now. Yeah. I don't, the job engine on the east side is just, it's unbelievable. And I mean, even though the tech companies aren't bringing their folks back to work, they're all defensively doing land plays and getting stuff ready. Look at Facebook in the Spring District, for example, and Google's out there, looking at sites. And now that's been one of the interesting things is I think the defensive posturing among these, the tech giants here, in a space where there's limited land availability, frankly, as you know, Andy, right?
Oh, yeah.
I mean, that's one of the things that drives us here and it makes this a great market is it's just, you go to Southern California, you go to Phoenix and, you just keep building as far as you want to go build, right? And you can't do that here.
Yeah.
I saw a thing yesterday and I only caught a glimpse of it, so somebody correct me, but I saw that I live on Mercer Island and the Farmers Building got bought by a California gaming company.
Yeah.
it's obviously going to be moving up here. So I
Yes,
mean,
it is.
if you think it's a bad area, they surely don't think so. So
No.
Yeah. Oh, it's true. Okay, we got a couple of questions. The last question: are the Celtics going to win an NBA title this year?
No. We need Kevin Durant.
Yeah. Yeah.
Would that trade ever happen? Is he going to go
No,
anywhere, Brian?
No. No one's trading Kevin Durant.
No.
Yeah.
All right.
No, he's not like you and me, Andy. We can get traded in a second.
Mhm.
That is true. That is very true. Okay, we got just, I'll get to a couple of questions. Let's see. I have a duplex in downtown Redmond and can develop into 6 units for 4-story townhouse. I was looking for, okay, we can pass on that one. What are your thoughts on the strength of the residential market locally and across the U.S.? We had asked a lot on why the residential housing market is so hot right now. Would be interested in getting your thoughts on why it's so competitive.
a lot of people make money in this area and they want to live where they want to live. I mean, it's pretty simple.
Yeah, cost of living is less in the Bay Area, and it's easier to get out to the mountains, and it's just, and that's not going to change, right?
Even Boston is more expensive than Seattle, in my opinion. So.
Mm-hmm.
Yeah.
Michael, one question.
That's not what it sounds like, but is it really?
Yeah.
Oh, I think so. I was in Boston and Sudbury this summer, and I was looking at the prices, and I'm like, wow, this is crazy.
Yeah, they've gone up. I think they've gone up like 33% here. It's a little out of control, but I just assume
That's a
Seattle.
big number.
It feels like Seattle is like doing the same thing, though.
Mm-hmm.
You were always ahead of us, though, to start at a higher level.
I got it.
Yeah, that's true.
Michael, if the Fed does what we're expecting, then that's probably going to take a little wind out of the sails of the single family market, right? And one might anticipate that it's just going to be a little more juice for the multifamily side, right? Over the next.
I would think so. I mean, people, one thing that people aren't seeing is rates are low, but people are leveraging less when they're buying in the single family space.
Mm-hmm.
So, I mean, you just don't look at the cost of the money and the price of it. How much extra cash are these people putting in to do things? I mean, we just lowered our advance rates on, only within the private bank on what we'll do for home equity loans on second homes for clients. These are fine slices of things, but at the end of the day, the banks have so much money and they make all their money on the commercial side from lending out that money, and they can't find good deals. So,
right.
That still has to change. So.
Yeah, that's good. Oh, that's good. Okay, last question, real quick, 30 seconds. My goal is to own 10,000 doors by the time I'm 50. I'm 37 years old now. What's the quickest way to start chipping away at this goal?
Start.
I'd say get a good capital relationship. The people who've done, or a series of them, right? The people on the equity side, the people who have succeeded in doing that, they've found somebody who they trust and who trusts them. Maybe it's a doctor or it's a couple doctors, to start out, or some other professionals, or a high net worth person. And, that's going to juice the whole thing pretty quickly.
Yeah, that's good. Any other?
Yeah, get Andy's number. He'll help you get there.
Yeah, that's a good
Right.
Yeah.
Good.
Thanks for the plug, Brian.
Got it.
Brian, appreciate it. Well, everyone, we'll wrap up. Sorry, we're 2 minutes over. I can't thank you enough. Really, we're very honored to have each and every one of you on. Literally phenomenal information. The best of the best, and most importantly, great people. You all really are. So thank you for taking the time. Thank you everyone for joining us, and hopefully you can join us on the next one. And
Thanks,
great day.
Andy.
Thanks, Andy.
Thanks, Andy.
All right. Thank you, everybody.
Happy holiday,
Happy
everybody.
holidays, everybody.
Mhm.
Same to you.
Happy holidays.
Bye.